What's up, YouTube? This video is brought to you by Webull. If you'd like to help out the channel and get 2 free stocks, make sure you check out my link below. Hey, I'm Sain, and if you're new here, I make videos on personal finance, how to invest and build wealth through the stock market. I started this Robinhood challenge for 2 reasons. Number 1, I wanted to simplify investing for those that wanted to invest but didn't quite know how. And number 2, I wanted to show you guys in real time the companies that I invest in to grow my portfolio from $0 to 10K, and then eventually from 10K to 100K. So feel free to join me on the journey by grabbing some free stock using my link below, or sit back and watch. Either way, I appreciate you. Today's video was about the 100 shares I bought and why I need and want you guys to consider buying this same stock as well. And so before we get into that, I need to do a couple things. Number 1 is getting close to the end of the month, and you guys know how I do at the end of every single month. As a transparent investor, I share with you guys how much my dividend payments were for the month. But right now, what I need you guys to do is guess how much you think that I made this month off of dividends, and then drop it in the comment below. Every video that I release from now until I make the dividend payout video, I'll be asking this question so you guys can get several shots at trying to get the answer right. Without further ado, let's hop into my portfolio and let's see how we doing this week. Okay, as you can see, my portfolio is currently sitting at $32,031.89. On the day, we're down 2.5%. On the week, we are down over 3.5%, almost 4%. On the month, we are down 2.5%. If I take you guys 3 months out, we are up over 13.5%. And if we go 1 year out, we are up a little over 2.5%, close to 3% on the year right now. Listen, man, it's been a crazy week in the stock market. That is to be expected. As investors, you got to know there'll be up days, there'll be down days, there'll be up weeks, and there'll be down weeks. However, you guys got to stay the course. As investors, man, we ride the waves. We look for dips, we look for pullbacks, and then we strike. Okay, and so coming up, you're going to have a lot of opportunities. So I want you to prepare yourself. Don't panic too much when you see the red. Some of those will be great buying opportunities that I want you guys to take advantage of. Okay, today, guys, I bought 100 shares, and in this particular stock, I want you guys to consider doing the same thing. So let's take a look at my portfolio. And you guys know over here, man, I teach you guys a lot about the stock market. And one thing I teach you guys is that we always get 100 shares of everything that we're pursuing. And when we get to our bare minimum, you guys know we end at 125. Let me know, why do we keep 125 shares? The answer is because once you get 125 shares, if you must sell, we keep 25 in the clip. Don't ever forget that. And so as you can see here, a list of stocks. I'm going to talk about At&t today. At&t, if you guys see, is currently sitting at $29.15. I have a current position of 100 shares. You guys know this is one of my top 5 favorite stocks. And so I've been making sure that I build out my position over time in this company because 1, they pay a good dividend. 2, they are a dividend aristocrat. And so for my dividend investors out there, for those of you that want consistent quarterly passive income, At&t is a no-brainer. I want you guys to get into this stock if you don't already have it as part of your portfolio. Then I want you guys to, number 2, work as hard as you can to get you a position established of 100 shares, and I'll share with you guys why in just a minute. The other thing about At&t is, as a dividend investor, it makes up a large portion of what I do and consider. As you can see, it's over 9.5% of my portfolio. I'll continue to build out this position over time, over the years, and down into the future, unless something drastic or crazy happens with this company. Okay, and so listen, man, those that want to be too deep, they'll tell you about the debt that this company has. I know about that. I'm aware of that. For this particular company, it doesn't mean as much as other companies that's strapped with debt. Okay, and so for that reason, At&t is still a good stock for you guys to add to your portfolio, and if you can, build it out to 100 shares or more. And I'm about to show you a couple reasons why. One of the main reasons why I want you guys to build out your position in AT&T is because, one, it pays a great dividend at 51.52 cents. You can't beat that. It's one of the better paying dividend companies in the stock market. I love it. It do wonders for my passive income. It do wonders as part of my portfolio. As you see, I'm very serious about AT&T. A lot of times when there's nothing else to buy in the stock market, I'll just deploy my cash into AT&T for that very reason, because if nothing else, it's going to keep paying a good dividend over time. Also, the number 2 reason why I want you guys to take a look at adding AT&T to your dividend portfolio is because once you get 100 shares, you can then sell calls. And I want to teach you guys, and I'll leave it right here, how to trade options and make $100 a day or $100 a week, depending on how you choose to play it. But I'm going to teach you how to do all of that, because there's a next level that I need to graduate you guys to and take you guys to on your investment journey. And this will help expedite your process and your wealth making and money making journey. Okay, and so get to 100 shares as soon as you can, and know that now you have the opportunity to sell options, covered call options to be specific. And I want to show you guys more and more about this, but make sure that you build out your position, you get your 100 shares, and then let me know in the comments if you want to know how to trade options and sell puts and sell calls. Let me know if you need to know what those 2 things are as well, because I want to make sure that you guys got all the information you need to become seasoned investors and wealth builders. Okay, so listen, man, AT&T is the stock that I got 100 shares of. You see, I not only have 100 shares in that, but I have 100 shares in several other companies as well. This is a strategy that I'm going to show you guys using AT&T, but I want you guys to, on your own, make sure that you are building out solid positions. You don't always have to chase a new stock. Sometimes you can keep adding shares to the current stocks that you already have to get them built out properly, especially if they have long-term growth potential. Now, mind you, AT&T is not a growth stock. This stock is currently $29. It will probably go to $39 when the market is good, okay? And I'm fine with that. But the money that it produces each and every quarter consistently, year over year, as an aristocrat, it's been doing it for 35 years now. And so I know that's guaranteed. That's money in the bank. We call that easy money. We sleep good at night knowing that, okay? What I need you guys to do is, once you know you got this consistent money coming in every month, you might not get a raise at your job, but you'll get a raise from AT&T. You'll get a raise from a lot of these dividend companies, as long as you build out your position in them and play them and hold them for the long term, okay? But then once you get your 100 shares, it's a whole new game that I'm going to teach you guys, called options trading, and how to sell calls and how to sell puts, and we can make another killing, and that is the game changer. Listen, man, I hope that was helpful. Up next, we have our word of the day, and today's word is call options. The word is call. Some might say call options. What I want you guys to know about this is this: when you talking calls, you are making a bet that you believe the stock that you're currently looking at will go up. And so if we looking at AT&T, you guys see it's currently sitting at $29.15. If we sold a call on this, we would be making a bet and entering a contract that would suggest that we believe this stock will go up, okay? And so it might go up to $33. That might be the number we say. We might say it might go to $35. We might say it might go to $39. Whatever it is, it's you placing a bet that the call or the option will go up. That's what a call is, okay? If you sold a put, you do the direct opposite. I'm gonna talk more about that one in our next stock lingo of the day. But today I want to focus on calls. So if you ever hear someone on TV or CNBC talking about calls and selling covered calls and talking that kind of lingo, all they're saying is they're placing a bet that the price of this company will go up. The best time to do calls is when the market is going down, okay? And so the best time to do puts is when the market is going up, because you're always doing the reverse, okay? And so it's important to look at these basic fundamentals of trading options and understanding calls and puts. But in this particular case, we're talking about calls, aka covered calls, aka selling calls to be specific. Listen, man, up next it's time for our question of the day, and today's question comes from Doris. She says, I recently subbed your channel after listening to you one time. You have a very good way of speaking and I like your message. To the point, with great information, and yes, you are humble and do not make newbies feel stupid. I started with $500 2 years ago and have learned a lot, but so much more to learn. I appreciate the knowledge of more experienced investors like you. I have tried penny stocks and $5 to $40 stocks. Also had 4 shares of Apple but sold it after it recovered from the crash with a small profit. I regretted not grabbing 2 shares of Tesla at under 400. I am over 4,000 now and more profitable this year. I have a new idea and want to buy and hold few shares of one stock and trade up a few shares of that same stock for quick profit. Making small profits now but missing out on the steady rise in price. I trade almost every day. What do you think? Doris, first and foremost, man, I thank you so much. I thank you so much for the kind words. You said a lot of good stuff in here, man, and so I just want to unpack a lot of it and make it as concise as I possibly can. One thing, man, way to stick with it, way to get your feet wet with different things. I hear you say you went from penny stocks to $40 stocks. That is part of the natural progression. That is part of the natural maturation process of an investor. 99% start off as penny stocks. I don't care how they try to pump fake on YouTube. Most of them bought some of the same type of companies you bought. They may make fun of you guys now, but just know they once did it too. Many won't admit it, but I'm here to tell you I've been around a long time. Most start out that way. I did in particular. I'm a guy, my first stock ever was Nike, and I've always been on that type of trajectory. However, as talking and helping more people, I always come into contact, and the majority of the people often say they started off in penny stocks as well. Another thing you pointed out, Doris, was that you wish you got Tesla at 400. Man, I can relate. I know so many others that can relate too. I first got Tesla. I missed the 180. I missed 350, and I got Tesla at 480, and I built out my position at 480. And so now, because I know the company will go to 1,000, 1,500, 2,000, 3,000, and eventually 5,000 if you can wait 5 to 7 years, I have been building out my position. Just, I don't care what the price is. I'll add at 700. I'll add at 680, I'll add at 500, I'll add at 480. And so when you know a company has great potential, you continue to build out your position. So don't worry about not getting at that price point. It's a difference when it's a great company with great growth ahead of it. It's a difference than Coke, where you need to make sure that with something like Coke or Pepsi, you get that at a specific price, or At&t, for instance. The companies that won't grow like a Tesla will, it is good to have your cost basis down. But companies that's going to grow and just go crazy on the stock market, it got the S&P 500 introduction coming up. And so with all the things on the horizon, Tesla is something that you want to be in. And I always recommend, you guys know I keep 25 shares in my portfolio, even though probably 10 do the heavy lifting, but 5 of those shares are always for exactly what you said, Doris. It is to invest in spec stocks, sometimes make quick flips and small plays, but more importantly is to walk alongside you guys. I try to invest in some of the things you guys are investing in, so I can tell you, hey, if you're going to get into company X, get it at this price point, and then we're going to sell it at this price point so we can 2x our money, get out and go on to something else. And so I do the same thing, and so I think it's okay to do that. Just don't make it a habit and don't make it the majority of your portfolio. Leave less than 1% of your portfolio for things like that. That's what I do with my 25 shares. Only a small portion is dedicated to quick flips and short plays. And I hope that was helpful. If you got questions, make sure you leave them in the comments. I'll grab them and add them to my next video. Listen, I make videos like this every week, so if you like this one, make sure you check out the next one. Remember, most people see the end result, very few consider the journey. Do me a favor, don't forget to like and subscribe to the channel. Make sure you grab some free stock using my link below, and I'll see you guys in the next one.